Happy Monday, everybody. Hope you had a great weekend. Happy to be back on Mondays, at least for now. And today is June 27th, 2022, and this is your Monday market update. Let's recap last week's market action. We'll preview what to expect this week. Starting last Monday, the market was closed for Juneteenth. If you had off that day, I hope you really enjoyed it. After a hard couple of weeks, I'm not so sure that more time to think it over was what the market really needed, but there was little in the news department over the weekend, only the breakdown of Bitcoin and other crypto that I mentioned last Monday. Holiday shortened week started with a bang on Tuesday. Stocks spiked higher at the open. What caused this? Aside from the 5% down move the week before and the digestion of that, the overall sold position of the markets, add to that Biden and Bullard both came out and downplayed the threat of recession. Sellers were exhausted. Now, I know that sounds silly, but overall news was minimal. Eco data was slow, as I mentioned it would be. You got existing home sales, the new record median home price, $407,600. You also heard from Fed Head Barkin, but nothing new. Inflation's too high. Fed's focused on bringing that back to 2%, the Fed's target. Did we forget that before the pandemic, does anything like that matter anymore? But didn't they say that they were going to use the target of average 2%? How do those averages look now? Well, the move was pretty much the oversold bounce. You could tell by seeing the biggest sector movers were those that were down the most. At the end of the day, the markets were higher, 2% for the Dow, almost 2.5% for each of the S&P and the NASDAQ. Also, nothing has really changed in the three keys we're watching: peak inflation, China reopening, and global calming. It did look like we spoke about last week. The indoor risk was on, and remember that sort of was crowded on Monday. So like the outdoor was crowded the week before, the indoor was crowded now. So watch out. Of course, here comes Wednesday when that exit door again getting crowded overnight at the open, giving back a lot of Monday's gains. At the open, stocks gapped lower, gave up about half of Tuesday's gains. Recession fears and inflation numbers from the UK and Canada did not help. Stagflation on the minds again. Powell spoke on Capitol Hill. He said much of the same. His tone, pretty even. Continued to state that the Fed will focus on taming inflation, getting price stability under control. He was backed into having to say that recession was possible, though not the intended outcome. He did spice things up a little bit, but with the comment that recent data suggests that real GDP increased in the current quarter. Recall last quarter GDP was a surprise and negative, and 2 quarters in a row of negative GDP growth by definition is a recession, as if most of us didn't think we're already in a recession. The economy just has not gotten the memo yet. So the stock spent time on either side of the unchanged line, up and down a bit, and closed about the middle of the day's range. All three indices down just slightly. Oil prices dropped, copper prices dropped. Those are both indicators of global growth fears. The president asked Congress to approve a gas tax holiday, and we keep hearing from the Fed heads all of this, and bond markets is still telling us, as I've been saying, that the Fed will not be able to be as aggressive as they're talking about. The 10-year yield is back down to 3.1% after visiting the 3.5% range. Thursday opened a bit quietly to the upside as news was digested and eyes were still focused on Jay Powell in front of Congress. He keeps laying the groundwork for being more aggressive, but more incremental comments. Nothing notable. Eco data from Europe was a bit disappointing. Recession fears, jobless claims continue to rise. And then some U.S. eco data with flash PMI suggesting a drop-off in demand and a slowdown in growth. Now, this will be a negative headline all over again, and it does seem that way. But remember, this is what the Fed is trying to do: slow growth and destroy some of the inflation-producing demand. They're just out for the perfect landing, and that is looking less and less likely. Stocks did bottom in the early afternoon and closed higher, but stayed below that 3,800 S&P number, up just 1%. The S&P was up 1%, Dow was up about 0.5%, and the NASDAQ was up 1.5%. I'm working on some special video ideas for some recession data points to remember, so watch out for that. Friday came out strong from the start. Not much data, only consumer confidence data that we spoke about last week. Remember, it is at the lowest it's been in 40 years plus. So we've seen low consumer confidence lead to strong up moves in the market in the past, so we'll see what happens. The day's news was dominated by the Supreme Court decision on Roe v. Wade. Not going to cover that here. Markets were steady and strong most of the morning, and then surged higher as the day went on. Ending the day, the S&P 500 up just over 3% for the day and almost 6.5% for the week. Dow up 2.6% for the day, 5.39% for the week, and the NASDAQ was up 3.3% on Friday alone, up 7.5% for the week. So just recall that the 5% move down the week before cannot be recovered by a 5% move up. Math tells us 5% down requires 5.25% up. 10% down requires 11.11% up to recover. But nonetheless, a good week pretty much erases the ugly week prior. We're still getting close to the end of one of the worst 6-month starts in the markets of late. Just to put a small point on this, the reason the markets went up last week is the subject of debate. Could just be that it was oversold. A lot of the action supports that. There's also a good chance that the latest market pricing scenario is that we're getting close to peak inflation and thus maybe, just maybe, peak hawkishness from the Fed. If we continue to price that in, as I've said, we may see the stock market come to price in much of what the bond market's been saying, that the Fed may not be able to be as aggressive as they're saying. They will fight inflation, but will they put the economy in a deep recession to do so? The question came up last week in Congress. Will the Fed cut rates if necessary to keep economic growth? Powell said no, but he also has said inflation was transitory. So take it all and stay data dependent. This week is much slower from an eco data standpoint. The big day is Thursday, inflation data point, PCE price index. Remember that one? It's due out then, along with weekly jobless claims to report on the job market. Fed heads will be out in force. Daly, Powell, Mester, and Bullard all set to speak this week. Never count them out. They can always move markets, especially when we're hanging on every word. Markets look stronger overnight into this morning and are slowly bleeding negative after a strong open, so we'll see how this goes. Summer weeks are here, chances for less volume and more volatility, so keep nimble, keep in touch, and keep focusing on the long-term goals we have. Come back on Friday for some more planning ideas. Another short week next week for Monday off, with Monday off for the July 4th holiday. So we should see volumes dry up as people head out of town later this week. They'll head out of town early. So possibly right after Thursday news breaks. Have a great week.